Guys, thanks for tuning in to another episode of Nuggets News. In tonight's video, I just want to discuss the US dollar tether, and it's been the subject of debate a couple of times over the years. So I just want to jump into exactly what it is and how it came about. So the US dollar tether is basically a cryptocurrency of its own, and one tether or one token represents one US dollar in value, and that's pegged to the reserves that the tether company have in their bank account. So that's been the subject of a bit of debate, and I'll talk about that towards the end of the presentation. So 319 million tether on issue at the moment. It came about because a lot of exchanges were having issues dealing with US dollars, and if anytime you go in and out of US dollars, it opens up a big can of worms to do with compliance issues, legal issues, know your customer, anti-money laundering policies, and for that reason, a lot of exchanges will just sit their customers' funds in US dollar tether and price their coins in the USDT. So over the years, we have seen banks have issues with their exchanges have issues with their banking partners. And last year, Wells Fargo and Bitfinex had a lot of issues with deposits and withdrawals. And for that reason, there was concern about the liquidity of the Tether token, being able to actually exchange it to and from their bank account to give it value. And for that reason, we saw the Tether lose its $1 pegging and drop down into the 90s as people were starting to price in the risk of whether or not you would be able to actually redeem your Tethers and if they still had value. So this is from the Tether website here. They're aiming to be a stable currency, 100% backed, transparent with their audit process, built on the Bitcoin blockchain via the Omni layer protocol. So it is nice and secure being on a blockchain and widespread integration, as we have seen a lot of adoption now from users and exchanges alike. Now, this is from their wallet page, and what it shows here is the assets and liabilities, so Tether on issue, and that the debate's been around whether or not they do have that 319 in their bank account with their banking partners, so that if there's ever a liquidity crunch and everyone rushes to sell or exchanges need to sell a lot of Tether, are they going to be able to pay customers out? And is that process going to be nice and fluent, or are banks going to create issues again and putting those deposits and withdrawals on hold? So because of those laws that I've mentioned. So here's another website you can, if you ever need to check out, the omnichest.info, which gives a real-time report of the number of Tether tokens that are actually on issue at a given point in time. So here's the article I want to jump into today from Cointelegraph. So this is the part that's worrying for a lot of users from the legal section of the Tether website. So once you have Tethers, you can trade them, keep them, or use them to pay people, but Tethers are not money and are not monetary instruments. So there's no contractual right or other legal right or legal claim against us to redeem or exchange your Tethers for money. We do not guarantee any right of redemption or exchange of these Tethers by us for money. There is no guarantee against losses when you buy, trade, sell, or redeem Tethers. So it kind of goes against the grain of what they've said they're trying to be, as I've just mentioned, being a stable currency, 100% backed, transparent, and secure, and then going out to say that legally, they don't have to redeem these. So mixed messages there, and hopefully they clear that up very soon. But here's a post from Bitfinex Drew from Reddit where he's saying Bitfinex does not own Tether. Obviously, the two have a close relationship. They don't own Tether. It's a sister company with a minority percentage of overlap. And questioning the banking issues, he's saying institutional customers are regularly moving hundreds of thousands or even millions of dollars in and out of fiat to and from the Bitfinex exchange to the Tether bank account. So he's saying that the audit will be complete this year. It's currently under that coming soon status, which is what's worrying people. And he's put out the bet to anyone that wants to take it, 5 Bitcoin, that the Tether's audit process will be in fact completed this year. And that's going to relieve a lot of nerves, I think, for the people that are worried whether or not this is 100% backed and if they can afford to pay everyone out if everyone decides to sell their Tether. So that lack of transparency is the bit of the issue, and people just trying to get their head around exactly how this all works and how it's come about. And I don't think this is a case of funny money. I don't think they'd continually issue Tethers without having them backed Okay, it'll be one of the greatest scams of all time if they are indeed shown to be insolvent. So, not a conspiracy theory. I think these are healthy concerns by people that understand how it works. And obviously, last year when they had the banking issues, only 66 million were on issue, and since then we're up to nearly 320 million. So I don't think there's any way that you can do that sort of money and just sweep it under the rug and hide it. Okay, I think this is a legitimate company that I believe are 100% backed. So finally, I just want to touch on another point that's really important. So we're arguing whether or not they're 100% backed. Now, lots of people that have got into cryptocurrency understand about how banks can do fractional reserve banking. So if you lend a bank $100, reserve requirements or ratios change from bank to bank, but they typically hover around 10 or 20%, depending on what country you're in. So if you deposit $100 to a bank, the bank is only actually required to keep $10, okay? Now, this opens up a lot of issues, and that's why central banks and bankers fear bank runs. So if 10 people with $1,000 all go to a bank, in theory, they should have $10,000 in case all the customers want to withdraw their money at once, okay? And this is the issue here, being 100% backed. Now, in the real world, banks aren't required to keep 100%. So if those 10 people that deposited $1,000 all go to the bank to withdraw that money, the bank may only have $1,000 in reserve, so 10%. So only one of those people can get paid, and the other 9 don't. So this just dives into a greater debate I could talk about for hours, and a lot of you guys will be aware of this if you got into cryptocurrency, about how the financial system is only fractionally backed, and they allow to lend out with only keeping a minority in their reserve requirements. So the fact that we're debating whether or not this is 100% backed, in the real world, banks only keep 10%, okay? I'm not saying they should only keep 10%. Tether should be 100% backed, but I just want people to be aware of this issue and why we see bank runs in and banks go into meltdown, because once customers start to withdraw deposits, okay, they can very quickly empty the balance sheet of banks. So a great topic, and I love seeing you guys dive into these issues, and to have a deep understanding of these issues is really important as we further our crypto journey, and this is going to become a big part of the crypto world in the future if we continue to grow. Okay, there's going to be more and more tethers on issues. So as always, guys, please give this video a like if you've enjoyed it, share these videos around, subscribe if you haven't already, and as always, thanks for tuning in. Cheers.